What's up, everyone? In this video, I want to recap a few trades that I took. I also want to recap a few trades that we took in my Discord community. Some setups, I'll review my thought process as it was actually developing. And some trades which I did not take, I will go over and review the chart after the fact to see if we could pick up some good lessons to prepare ourselves for future trades. I'm also going to tie in psychology tips to each setup and each chart. Be sure to stick around, drop a like on this video. And if you want a very good resource, I'm going to link my Instagram in the description below at Trade. I post daily trading recaps on here, along with very good trading tips and tricks. The link to this will be in the description below. You're definitely missing out if you're not following it. So now let's get right into the video. First, go over Wednesday's action. I want to go over the NASDAQ. You all know I trade QQQ off of this chart. Now, just to get context, the market has been in an extreme uptrend. Every day we're making highs. Every day or every pullback also has been getting bought up. We saw the day prior to Wednesday, very strong lower wick. This is an area of consolidation before a move higher. So this validates as an area, a key area of demand. So in the pre-market plan, pull this up here. QQQ, another all-time high. There is no reason to be short right now. We had a bunch of demand zones lower that are pictured on the chart over here. I post these every single day in the Discord. So short side moves really have not been valid unless you are looking to scalp or take profits fast. If you're looking to trend trade something for a crazy move, we may get it soon. However, the market right now is just making crazy upside moves. Dips keep getting bought up. So here we have the Qs. This thing sold off in the morning. It consolidated and eventually blew past not only the first demand zone, but the second demand zone. So what this tells me is buyers are not confident in holding price higher at this imbalance up here. They may want to wait for price to come lower to get discounted, or sellers are hitting the market pretty aggressively. As we did sell off, volume really not too convincing here. However, this 14738 was a key imbalance because this was a 2-3 day long consolidation period, which coincided with yesterday's V-shaped reversal. So a very key area that you have to look at the supply and demand equation and say buyers need to defend this if we come back and test it. If buyers don't defend this area, sellers are going to be strong and the market can continue to sell off. So very possible we could have a very strong aggressive sell-off day. Now, I did not take this trade, but in real time reviewing this, I did see this little wedge right over here where we made some higher lows. We also made some lower highs and some higher lows. So we got tighter and tighter. Eventually, when this thing broke out, I would have liked to see a little more VVM. Members know what that means. It's a little bit of a new terminology that I've been using in the Discord to measure volatility. We really did not get that, but once we did break out, this thing did have a nice rally. Now, since we are below these imbalances, these do become invalid. And now the chart looks much cleaner where we broke above VWAP. And this area right here prior to the sell-off could be looked at as a valid area of supply where price had a hard time moving up. Now, at this point, the market was selling back off, and the bottom consolidation period in the intraday commentary tab where I post my thoughts, we wanted buyers to defend this 30-minute demand zone. This was an area of consolidation for 30 minutes. So this would be marked as an area of demand, just like this, which when it forms from an existing demand zone, to me becomes a stronger level. We eventually got that pullback into this. It was defended by buyers, and we did move up. I would have liked a little more of follow through or commitment from buyers to really signify a strong move at a strong imbalance. But we really never got that, and we chopped, consolidated all afternoon. But this zone was defended from buyers. Now at this point, this relates back to my Instagram picture that I posted earlier in the week about higher day breaks. Now let me pull up my S&P 500 plan. We had a supply zone at 4345. Once above, we could break all-time highs. To the downside, we had a bunch of demand. Now, we have to be open to all scenarios. You know, I just said that supply zones really are only good for scalps, which is true in this case. We were watching for buyers to be stronger than sellers at supply, for this can rip above all-time highs. But the lesson I want to go over here is about fake out higher day breaks. And when you add supply and demand to the picture and to the context, I posted this on my Instagram. High day breaks with no follow through or new buying is a recipe for reversal. When you add a supply or demand imbalance to the context, it's an even bigger trap for retail. The market is designed to trick you at all costs. Always question your position before entering. So high a day, low a day is probably one of the easiest things we could do as a trader. You just plot a level at the high or the low and see how the market reacts to it. Now, I'm a big contextual trader. I like being reactive to whatever the market's giving me in the present moment. I did not take this trade either, but reviewing this, these are common similarities we saw later on in the day that I actually took trades off of. And this is something that I'm going to be watching, and I have been watching from previous price action. Here we have a high. When we fail to break out above a high and we reject, sellers hit the market, they're responsive to price inside of a supply zone. It is a very, very, very bearish sign because no new buyers are agreeing with prices higher. You have no volume down here to confirm it. The market basically responds to it, and sellers hit the market heavier to the downside. So we did sell off from the supply zone. This was a valid short. I know some members did take it to the downside and made money off of it. Eventually, we came into this demand zone, found no buyers or bids here, heavy volume coming into the market, and eventually V-shaped reversed, basically not inside of a demand zone, directly below it. Now, later in this video, you're going to see a new tweak to my strategy that I've been doing about breaking below demand zones, where this kind of respected it perfectly. We'll get into that shortly. But eventually, nothing really to go over end of day Wednesday. Pretty flat day besides ES and NQ. But that's going to bring me into Thursday's action. Keep in mind this current context. Microsoft was the first trade that I took. This bounced off of the 276.50 demand zone. Now, a common theme that we've been seeing in the market is stocks have been breaking out above key levels or pulling back into demand and bouncing within the first 1 to 5 minutes. I normally do not play it. However, it has been providing good opportunities, and we have to seize the opportunities, being reactive to what the market gives us, and this is the common theme. So the first minute candle obviously has the highest amount of volume every day. However, this was 650,000 shares about. And then we consolidated. I love seeing this formation. VWAP was hugging up, and we got that quick push up above the 277.50. Ideally was targeting a 279 break into 280. However, once we got that quick push up above 278 or 277.50, I took the 280 Microsoft calls for Friday's expiration at 70 cents. My stop was below the 276.80 area. Now, for those that have been following me, you all know that I like, when I do scalp, the trades that work out right away are going to be winning trades for me. And the trades that mess around, consolidate, really don't move in my favor immediately are the ones that I may have mistimed, and I may have to reconsider my position or be cautious a little bit, although I have to follow my plan. So this worked out right away. This broke above the 278, volume really not telling us too much of a story. We had resistance around the 278.50 area, and as soon as price came up to this and we tried moving up every time, we just kept getting rejected. And as soon as we moved down, I sold my full position for a little under 35% on the 280 calls. Not huge of a gain, not so small of a gain. It's just about being reactive. I wanted that push above 279 into 280. We just never got it. Now, nothing's stopping the market from pulling back a little bit and then reversing up. However, I'm always protecting myself in this market. I'm always protecting my profits, and I'm never letting a green trade turn red on me. I did not want the premiums to get crushed, because if I did hold on to this position, I would have been down on it. And it was a good sell because this just consolidated. It moved sideways, and it really did not move anywhere. QQQ was the next trade that I took. Now, from the pre-market plan, we had a bunch of demand zones that got destroyed overnight. We had very strong selling. We also had supply around the 622.25 area that if we get above it, chances of moving higher or moving up are higher. We also had demand at 145.41, 145.58, and a bunch of other smaller imbalances. So overnight, very aggressive selling, created supply. The market opened up, and yes, this did reject supply, but going back to the bigger picture and the higher time frame analysis, I personally am avoiding puts. This did work. This was good for a scalp. However, based on my bias and how I want to trade, based on the overall conditions and the context, I avoided this put play. These did pay pretty nicely, and I know some members did take this as well. But the trade that I took on the QQQ was this sell-off into demand. This is a very, very key demand imbalance at 558 and 541. Very, very key. Aggressive sell-off. And if you're watching price paint its picture on the canvas, aka the chart, you would have seen very responsive and aggressive buying. We could obviously see that with that green candle. And at this point, I had my options loaded up very fast. I traded the QQQ, 356 calls. I got in at $1.56 down here. As soon as we made that push up above this high, I got long up here. My stop was below the low. Now, one thing about chasing and responsive quick move like this is on a huge green candle like this, where your stop loss has to be is, for me, by the low. So now I'm risking at this point about 30 or so points on NQ. And this trade did yield me about 50 or so points. But for scalping, I'll take a 2-to-1. So this thing did continue to move. We came up back into the supply imbalance. And as soon as we got that sell-off, I sold my full position at $2. These went to a high of, I think, 215, 220. So I left about 15, 20 cents on the table. However, just seeing this quick little 1-minute candle after 3 very aggressive green candles to the upside, had to protect myself, and I had to take profits when I did. Now, the rest of the day, we just moved sideways. We came to the supply zone, very flat action. We came back down to test those lows, and then this thing did rally, but I really did not see any clear or proper setups other than bouncing off this demand zone. For the members that did hold, this demand zone did prove to be an all-day runner. This was a nice move, but if you had the patience and you were more of a trend trader in the situation, this would have paid. However, I'll take my profits and I'll move on to the next trade. Also on Thursday, Amazon sold off into the 3640, 3631 demand zone. At the same exact time, I played the QQQ calls. So the bounce off of demand on NQ helped put more fuel in the fire for Amazon to rally. Now, once we moved out of this demand zone, we consolidated for the next 2 hours or so, 2.5 hours. And then as soon as we got above the 3680 area, volume started pouring in, some nice momentum, and then this thing continued to run. However, from demand, that was a clean entry for those that did take that. Boeing was another one. I did not take this trade. This more is focused on the Dow. However, at the same time, the Qs came into demand. Might have just been a coincidence because the Dow V-shape reversed as well, came into demand, and then this was an all-day runner from that as well. Now, I'm not one to boast about profits. However, it's amazing to see some of the members who sent me theirs. This member, $12,700. $1,000 profit after getting the course on SPY, 50%. Another one, $8,000 following supply and demand zones on the Qs. First 5-figure day. So it goes to show you when you follow the process, the money will follow. Trading is all about testing your patience and not letting your emotions get involved. And these are all the results to follow. You know, this member surpassed the PDT rule, trusting the process, always learning, nice profit on SPY, another 5-figure day, and another trader, $4,300. So pretty crazy to see. I'm very happy for these members. After Boeing bounced off of that 226 demand zone on Thursday, the plan for Friday, today, was for some continuation since we had buyers factored in at that demand zone. And since close to end of day, we got that news rally with volume to confirm it. And we were coming up to that 238 to 240 key area that I was watching to play a breakout, to play calls, as long as we had VVM for some continuation. It's very important to watch the Dow to help determine market direction as well. So in the pre-market, we came into the zone, and then around 9:45, we came into this key area, and we found a wall of resistance at 240. Now, I honestly did not play this break just because of the Dow and just because of the weakness we saw in BA. Now, it's always important to be reactive to a level. Just because we come up above a level or below into demand, above into supply, does not mean to take a trade. You have to see the participation's reaction, if we have buying, if we have volume, if we have momentum. So essentially we came to 240. I did not take this trade. It was a good patience on my end because we eventually did dump. Now, this was not a terrible trade if you took it long at like 238.50, 239. Sometimes good trades don't work out and we lose money on them. And sometimes bad trades work out and we make money on them. So it's based on your perspective. If you follow your plan and you do everything to trust your setups, respect your stop, you did something right. However, I did not get an entry at this point. We pulled back into this area that we opened at. Buyers defended it, and then we started moving back up. Now at 10:15, I played the Boeing 240 calls at 98 cents. Show you what it looked like. Now, my thesis for this was we broke above 239.50 again. We were coming to test the high. Buyers kept defending every single pullback. So I had multiple different confirmations lining up. In my eyes, this was a very good trade. And if we were to look at the Dow, and pull up YM here, the Dow was showing relative strength. We were rallying pretty much all day. Now, the first mistake I want to go over here was despite YM, the Dow's futures strength, Boeing was not really showing similar strength as the market was. Boeing was very flat. It was very choppy, but I still took the trade. Nothing wrong with it, right? So now I'm in here, the 240 calls. This does not work out so much right away. We come to the high, we make a double top, and we start selling off. All my scalps and all my trades need to work out right away for me, or else I feel like I mistimed it, and I have to be cautious because maybe I could get a better fill at a better price if I'm a little more patient. So then we came back down. As long as we maintain the uptrend, I was pretty comfortable. So now we're just moving sideways. I traded, second mistake, I traded Friday's expiration. So chop, sideways action with no VVM, is going to destroy my premiums, and theta is going to eat them up. So slowly I'm decaying. Eventually this thing starts building volume. We start coming up to the 240 area. Once we're above 240, now I'm watching a 241 break into 243. So we start building some volume. Then we start breaking out, right? Now at this point, we have a huge volume spike. This is the euphoria aspect that I posted on my Instagram, where a lot of traders expect a high at daybreak. Exactly what I said earlier in the video. If you don't have any intention above high a day with continuous volume or new buying or demand, you could look at this as absorption, and the market may, if you is met with responsive selling, like we saw in SPY, can pull back down. So I wanted to see a further breakout. Eventually, we did not get it. And my third mistake was not being responsive enough to the market. I was holding this position because I really had a thought or a feeling that we were going to rally. But at this point, the Dow was still ripping and Boeing was having a hard time ripping as well. For the best confirmation, we want the market to be in confluence and we want the equity to be in confluence. So now this is the red flag that the market starts waving at me. I don't respond to it. I'm holding this position, and just slowly all afternoon we're coming down. We're still maintaining the position, but at this point the Dow is still ripping, and at 11:49 I exit my full position at 38 cents, I think it was. For a decent loss. It sucks on a Friday because I'm always one to stress to protect your profits for the week. Still green on the week. However, I'm very upset about my performance because I mismanaged this trade. I had all the confirmations I needed to, but I made 3 key mistakes about the market, about the red flag, and about the chop that really didn't confirm to how I want to trade. Eventually, we never got that 240 break. We moved in a 50 cent, a dollar range all afternoon. I'm happy I got out where I did. I'm happy I somewhat followed my plan. But at this point, I was hoping for desperation that we were going to move up. And another mistake I did, which really screwed me up psychologically, was when we broke out above high a day, I saw my profit and loss. And I saw that I had a losing trade, was now into a green one, and I wanted to squeeze more juice out of the lemon and try to make more profits because I saw how much I was down. So if you're looking at your profit and loss when you're trading, it's going to make you make irrational decisions based off of emotions and not based off of factual pieces of information that the market's presenting you. Be reactive, follow your plan. If it gives you a red flag, get out of the market and focus on another setup. So I hope you could take this lesson that I took for this loss. I hope you could take this loss as a lesson for your own trades. Maybe pick up on some points that'll help you for future trades. Was a pretty good setup. I'm not really too mad about the market itself. I'm too mad about my performance and how I let my emotions get the best of me. And I'm always one to stress about how emotions play a big part in success in trading. So that was it on Boeing. Tesla was another one. I did not take this trade, unfortunately, because I was in the Boeing position. This bounced off demand, this sold off from supply, wedged, we rallied and rejected. So nice clean setup on that. But pretty dead Friday on the markets. Not really much to go over besides an all-day runner. So I hope that helped. Took a couple of trades, some nice winners. That one loser on Boeing. Hope I helped review some charts, look back in hindsight for what we can use to improve on. But I think I'm going to end it here. Be sure to hit that like button, follow me on Instagram, and if you really want to learn more, I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. I do plan on adding some videos in the near future, and prices will not stay the same for much longer. But besides that, I'm going to end it. Peace out.